Welcome to Rich Conversations, where we talk about building wealth with purpose. I'm your host, Orooj Sayed from Orooj Financial Group, and today I'm here with Zahid Sayed of Orooj Financial Group as well. Whether you're building your business, your legacy, or both, this is the space that we talk about real strategies about building wealth with purpose. So hello, how are you doing, Zahid?
I'm doing very well. Thank you very much for having me here.
So today we're going to be talking about something that is an uncommon strategy that people use for building wealth that not a lot of people know about: life insurance. And I feel like it's a little bit of a taboo topic too, because some people think that it only does one thing.
Yeah,
But as you know, it's more than just protection. It's to help you build wealth as well.
absolutely.
So I'm going to get into some questions to ask you about it. In your opinion, what do you think is the biggest misconception people have about life insurance?
No, life insurance, most people think that is only good if you die. And it can help you death benefit. Yes, it is true. Of course, that is the basic purpose of life insurance is.
Protection, yeah.
But what they have done over the period, and it is years and years now, they made this strategy, life insurance, a very great strategy for building wealth. Not only for, God forbid, if something happened, but also grow wealth within life insurance and through the corporations and on the personal side also.
Yeah.
Now, as you know, the life insurance has one main thing, which is very important, is a tax-free benefit. And how you use it during your life and after you're gone. It is how you set that up. It's only a myth that life insurance is only for dying.
Yeah.
I think it's life insurance for living also.
Yeah. So it's also seen as kind of like an investment product as well too, because there's so much more that life insurance can do.
Absolutely.
So why do wealthy individuals invest in life insurance rather than like any other type of investment?
No, life insurance we consider as an asset class.
Yeah.
So like we have a real estate, you have a business, you have investments, but also the life insurance is also an asset. Now, life insurance provides a lot of things for business owners and wealthy individuals that a lot of other products do not provide.
Yeah.
For example, they provide a guaranteed benefits. So if God forbid something happen, then that death benefit must be paid out.
Yeah.
It also provides something called liquidity. So if you need to dip into life insurance benefits or cash values, so it provides you liquidity. It is very safe because the investment done within that life insurance policies, they are very safe investments, so they are not risky. And you have seen what happens in the market just now, right? So they want to put some money where that money is protected. And it also has something called a tax-free benefit. So, if death benefit happens, there's a tax-free benefit.
Yeah.
And also the growth.
Yeah.
So growth is also tax-free.
So I was just going to ask you, how does life insurance compare to things like stocks, real estate? Because like you're mentioning, these are all the pros that life insurance has with stocks. Even if they were to grow, they have that chance of falling down. And then even if you do take out money, you have to pay taxes on that as well.
Absolutely.
So now stocks is understandable, but how about like real estate versus life insurance?
No, look at real estate.
Yeah.
So we always thought real estate is the most safest way that you can put the money in, right? But real estate has two issues. One is a liquidity issue. So if you need to borrow money or take something out of the real estate, you basically either have to go and refinance it, which you have to qualify to make sure you can take that money out. So your credit going to be checked, your income should be sufficient to get any liquidity. Plus, if you sell it, you have to pay capital gain tax. And as you know, right now is not the best time to sell because the market is down. So that's why the real estate works. On the life insurance side, if you have a wealth, it works like a tax-free saving account. The money you put in, it grows tax-free, right? So if you need to borrow against it, you do not have to go through and qualify through your income or anything. So you can use for the investment purpose. So you take that policy, go to the lender or insurance company itself, and they can lend you up to 100% of the cash value.
And not a lot of people know about that.
No, a lot of people don't know about that,
Yeah.
because what happens is if you borrow against life insurance policy, that's considered a borrowed money. So that means there's no tax to pay while your cash value keep going up in the life insurance policy. So you don't have to really go and qualify, and it doesn't show up on your credit bureau also. So if you need to borrow more money, it doesn't show up. So a lot of people, they have to understand how it works.
Yeah.
So real estate and life insurance, yes, I love real estate. We all do real estate, but all your eggs should not be in one basket. So life insurance is always provide that liquidity, growth, less risk, death benefits, safe, guaranteed sort of kind of investments. That's, so those are the benefits for life.
So you call life insurance virtual real estate.
Virtual real estate, absolutely.
But it does a lot more than what real estate can do.
Absolutely. And also estate taxes, like your inheritance tax, for example, if you, whatever you want to pass on to your family, in Canada, everything deemed sold day before death. It can go between spouses tax-free, but beyond that, everything deemed sold before day before death. So that's mean that tax of capital gain and any other tax must be paid before it can go to the kids. So now you are looking at different things that are tax-free, like your principal residence could be a tax-free. Your tax-free saving account could be tax-free. But life insurance is also tax-free.
That's one of the biggest
advantages. So that
advantages
provides the money on the table, so we can take care of those tax that we have to pay CRA to keep that wealth, because you don't want to sell the wealth to pay the tax.
Now, a lot of people, when they think about life insurance, I know people think about term insurance a lot. So these advantages that you're talking about is seen in permanent life insurance mainly, right? So how would you compare someone personally owning a life insurance policy versus corporately owning it? And what are the advantages of doing it corporately rather than personally?
I'm going back to your that question you asked about term life insurance and permanent life insurance, and it's very important that we discuss that. Because term provides protection for time being. So if you have a mortgage, for example, and you want to protect that mortgage debt for a certain period of time, so you buy a term insurance because every product has its place, right? But that also, term insurance, a lot of people don't know, is also provides something called insurability. So for example, your debt's paid off or during that period, and you say, I can afford more, let me convert that into permanent policy, which has the cash value builds up.
Not a lot of people know that too.
And you don't even have to go through any medical.
You're
because
already
your health
secured,
can change because the health buys insurance, not money. Even if you are not healthy and not insurable, you offer them a lot of money, the insurance company would not give you a policy.
Because what buys life insurance is
it's health. Right?
Exactly.
So that's why when you have that policy, term policy, which gives you insurability, so you can convert that into permanent without any medical question asked. So that is where the term and the permanent lies. Right? Now, when it comes to personal whole life policy or permanent policies versus corporate, corporate has more advantage than personal.
And like a lot of people don't know that if you're a business owner, you can actually write off a lot of things too, or take better advantage of it. Like the loan that you were saying that you can take against the policy.
Absolutely.
Corporate owners or business owners have that advantage over.
So the corporate people do not have one thing, what is called tax-free saving account. The personal side have. So for example, you have a money that you don't need for day-to-day business purposes, and it's in the corporation, because the corporation up to $500,000 under the small business deduction, that you pay only around 12% tax, right? So now you have more money to invest. But the problem is, if you take that money and invest that money, the growth on that is called passive income, and it can be taxed at over 50%, 51.3 to be exact, in Ontario. So we want something that we can put the money in and can grow tax-free, like tax-free saving account. So business owner have that unlimited TFSA in similar to on the personal side, so they can buy a product that can dump the money in and keep growing tax-free. Right? Now, if they ever need money, so that becomes their asset class. So whatever the cash value, which could be up to 90% from the year one. So for example, if you put 100,000 in, you could have a $90,000 cash value in the policy, and then keep growing because those policies pay dividends. And that once the dividends paid, they become grantees. So that's why the risk factor is very less. So you keep growing. Now you need money. Remember I talked about liquidity? You borrow against that policy to put it back into business, and you can write off the interest because you are putting money back into business.
Yeah.
So you have on one hand, the money keep growing. Another hand, you are using the money to build wealth and protecting at the end everything.
That sounds like a perfect for business owners.
Yeah, perfect.
And I'm sure that anybody who doesn't know about life insurance will probably want to look into what it can do for
There
them.
was an article I was reading. They said a product to die for.
Yeah.
You know, so
To live and to die for, both. Yeah. Okay, let's do some rapid fire finance questions. What do you think is the biggest myth that people have about life insurance?
The biggest myth is just what they think is only provides benefit if you ever die.
Yeah.
That's the biggest myth.
Yeah.
That, another is there's no other benefit that you can take from life insurance.
Yeah, and
policy.
we just outlaid
We
like
just
so many of
outlined
them.
it,
Yeah,
right?
exactly.
And also, biggest myth, it's not a myth, but a misunderstanding that everything is gonna go tax-free to my family. So if I own 3 properties, everything is gonna go to my family tax-free, right? Or they will have it.
And you're saying life insurance helps to protect that. If you want it to go tax-free, you want something that will actually help you get
Which
it
has a
since-
tax-free status.
Yeah.
So for example, after calculation, it comes to that you have to pay $1 million tax liability. So either you have to sell the properties to pay that, or have a life insurance policy. They'll provide you $1 million, which you did not pay $1 million for.
Yeah.
Right? So you paid maybe pennies to dollar, and you can write off that. You can write a check to give it to CRA.
I don't think I can do rapid fire questions with you because you have lovely big answers. Let's go to the next one. If you could invest in one financial product forever, what would it be?
Oh, I mean, I would actually not. I would not only put in one.
Yeah.
Because you don't want to put all your eggs in one basket. You don't want to have only life insurance.
Yeah.
You don't want to have only real estate.
Exactly.
Right? Only stock.
Yeah.
And we are seeing it, what's happening to real estate, what's happening to stock. But life insurance is always the winner. Doesn't really matter market goes up, market goes down,
Like you said, there's guarantees.
Yeah,
to
it is. Yeah. It has that status.
Yeah.
It's like umbrella for everything, When you go on a cruise, what do you see on the sides of the cruise?
The lifeboats, yeah.
Lifeboats.
Yeah.
So this is the lifeboats for your wealth and for your family.
Okay, good. And lastly, this is a random thing just for about business owners. What's the strangest business expense that you have ever seen business owners make?
What do you mean by
like strangest expense?
Because the business owners, they buy a lot of nice cars and they spend money into things that but when I see the only thing that a lot of business owners, I'm just dealing with one family right now, $40 million estate, they don't even have a will, and they don't have no insurance policy, and if the wealth would be lost, most of it, then it goes to second and third generation.
Yeah.
Right? So you need to make sure
make smart expenses. And some people see like life insurance or what you just mentioned as an expense, but like who you said, it's basically an asset class.
Asset.
Yeah,
Absolutely.
Exactly.
Absolutely.
Okay. Now let's talk about life insurance versus trusts. Now we talk a lot about estate planning, but which one do you think is better for estate planning, or why do you think one is better than the other? For what purpose?
No, life insurance is more as a tool. That's what we use. The trust is more a strategy, right? Trust is very private. If you have a will, anybody can have access to your will, who's getting what. And will can be challenged. Trust, on the other hand, is very private. You can put stuff in the trust, and there are ways to transfer the wealth to next generation, and they don't have to get taxed until they sell that asset. So you can move assets into the trust and skip that tax problem beyond when you put it. So you're going to have
the question would be, why don't people just set up trusts? Why would life insurance, and where would life insurance help with that?
Life insurance trust does not replace life insurance. Life insurance complements trust.
Yeah.
So for example, I put something I bought for 100,000 and now is 200,000. So I move that into the trust by doing what we call a straight freeze. So we can lock in the growth going forward, but we still have to pay tax for that between 100,000 and 200,000 tax liability, right?
Yeah.
So that's where the life insurance comes in. So we put life insurance for that amount inside, so we can pay off that tax, and then the
Move
next
everything.
generation.
Exactly.
And then you can do the same planning for the second generation.
Yeah.
Right?
Yeah.
So trust and life insurance work
together perfectly, yeah. Okay, so now on the topic about trusts and life insurance, this kind of like, you think about like family problems that might happen in the future. Now, let's say there's life insurance that a family bought together and then a divorce ends up happening. How does life insurance work in that?
So life insurance is considered as a marital asset.
Okay.
So that means that, when divorce happen, the benefit of life insurance has to be divided equally.
Okay.
So now how you benefit life insurance, as I said, term insurance usually do not have any benefit. So you can cancel that life insurance and has no meaning, right? But if you have a policy that has a cash value inside, so that cash value has to be divided into two.
Yeah.
Now, similar to your RRSP, if you have a RRSP, it has to be divided into two. So what happened is when the lawyers discuss this and financial guys discuss this, they put everything in the pot and then they divide equally. Now, you can have a life insurance, keep the life insurance, but equal to whatever the amount you're supposed to give it to other spouse, you have to give it from the other assets.
That's interesting.
Right?
Yeah.
So it's very, very important that you have something called individual life insurance, not joint. Because joint, if you have, you can't really divide that into half.
Yeah. So when would you recommend joint life insurance?
Joint, usually we have it for the term policies which would cover, say, mortgage debt.
Yeah.
Right? So they have no other benefit. But when it comes to the permanent policies, universal or whole life, we recommend individual policies. If you want to keep your policy, say if you bought a policy when you were 20-year-old or 30-year-old, and now 50-year-old, you guys are divorcing. So you can't buy another policy for the similar benefits that you bought 20 years. So you want to keep that for yourself. So you can discuss and keep your policies as is by giving the other person the equal value that, has. But there is another very important thing. Actually, what happened that you got the custody and then court says that you have to provide child benefit. So court will actually can force you to buy a life insurance policy and have it there while you are helping the kids and providing the child benefit. Now, best way to do is that whoever has the custody, they become the owner of the policy and the beneficiary of the policy. And they actually pay the premium too by getting the money from the other spouse. Because what happens if I am owner of the policy, I can stop by paying the premium and the policy can lapse.
Yeah.
So that's why there's a control, and you want to make sure if God forbid something happened to me, your commitments doesn't end. Even the person passed away who's supposed to provide that benefit. So that's where the life insurance policy comes in, provides that benefit, so you can take care of the kids for a long time. So life insurance actually provides a lot of benefits.
A lot of benefits, yeah. So going back to one of the benefits of life insurance, where you can borrow against those cash values, can you talk a little bit more about that? How can you fund the policies without actually funding it yourself? So
there are two ways that you can do.
Yeah.
One is called back-end borrowing and one called front-end borrowing.
Okay.
Now, front-end borrowing is what we call virtual real estate. That's mean investors, business owners, real estate investors, they buy policies for the same purpose of estate tax and everything else. But they also think that they can make more money on that money that they're putting into the insurance policy. So we have a way that we can pre-approve them for next 10 years. So for example, if they put $100,000 in the policy, they can borrow up to $100,000 to put it back into business. So when they borrow it, say they pay 5% interest, usually it's close to prime. Right? So if they make 15%, they can make extra money. So they can have money that working for them and money growing tax free.
That's why it's seen as a great investment.
So that's the front end.
Yeah.
The back end is whenever you need money, the cash value you can borrow against the cash value at one time. You don't have to borrow all the time. You don't have to borrow every single year. So you borrow it whenever need is done, you can pay that back. A lot of people use for tax-free retirement income. So especially the physicians and lawyers and accountants and all that, they buy these policies, grow them to the retirement, and then they borrow against the policy as a tax-free retirement income because there are no tax on the borrowed money.
Yeah. And then the policy, once it pays out, it can actually pay off that loan too
That's
if you don't
it.
plan on paying it off.
That's
yourself.
right. So for example, if the $5 million comes in
Yeah.
and you have $1 million loan, the family will get $4 million after the million is paid off.
It's still great because
Yeah.
you used $1 million and you had $5 million.
That's right.
You still have something to give back to your
Absolutely.
family. Yeah.
Absolutely.
So talking about giving back, let's talk about philanthropy. Life insurance can be used for charitable giving as well. So you want to talk a little bit more about that?
Yeah. So life insurance basically, the giving to charity, which way you give, that matters also.
So people usually think that giving cash is
Yeah.
the best way.
So it's actually the worst way
Yeah.
as a financial tool if you use it.
Yeah.
Right. So philanthropy, if you want to look at where you can make most impact.
Mm-hmm.
Now, for example, if you give cash $100 and you are 40% you can get back. So basically it costs you 60 cents or $60 to donate.
Mm-hmm.
You got $40 back as tax credit and you got 60. But say if you donate a life insurance policy,
Mm-hmm.
and we're going to have one full episode
Just talking
on
about
just about that.
Yeah.
So if you guys donate a life insurance policy, which you bought for maybe $100 and now is worth $1,000, so that's mean you are actually going to get a tax receipt for $1,000, even if you put $100. So it's actually cost you a lot less to give, and the charity gets bigger benefit. Now there are you can donate securities, you can donate flow through investments, stocks. So there are a lot of other ways to give. Is again, as a financial advisor, philanthropy, I actually educate people and do seminars on them.
Yeah.
And that's the best way to give.
Yeah. So that's why even like people who are very wealthy, they don't tend to just write checks to charities. They tend to give life insurance because there's the impact of, again, about that growth aspect.
Yeah.
A lot of people don't know that it can still keep growing and keep donating.
See what happened. Life insurance, when you are donating,
Yeah.
you are donating while you're living. Now, charities have to find a new donor once something happens to you. So have a strategy that you donate during your life, but also once you're gone to leave a legacy.
Yeah.
So they don't have to find another donor to replace you. They have to find another one. So that's where the life insurance helps. So leaving life insurance in your will for a charity could have a really good impact on your, say, tax problems or any other benefit for the charities.
Yeah. So life insurance, as we've just seen and talked about, has so many benefits, from it being tax-free, being better than stuff like real estate stocks because it just has a lot more advantages, you being able to access the growth in those policies tax-free, and then whether it comes to settlements, trusts, estate planning, charitable giving, there's so much that one thing that people have a lot of misconceptions about can actually do, which is insane, but in a good way. Thank you so much, Zahid, for telling us about the advantages of life insurance. And thank you all so much for joining in for another episode of Rich Conversations. Please be sure to share this episode, leave a comment down below, and follow us for more. Until next time, keep growing wealth with purpose, and we will catch you in another Rich Conversation.